As 2026 approaches, the U.S. Federal Reserve is entering another year of close attention. With economic uncertainty, leadership changes, and policy decisions ahead, markets are watching every move carefully. The U.S. Federal Reserve heads into 2026 facing a complex mix of economic signals and institutional challenges. After implementing 3 interest rate cuts, policymakers are now expected to move more cautiously as they assess the balance between growth and inflation. While additional rate cuts remain possible, analysts widely expect a slower and more measured approach. Economic growth has remained relatively stable, but inflation pressures have not fully eased, making future decisions more delicate. This combination has placed the Federal Reserve firmly in the public and market spotlight. According to economists, the coming year is likely to be marked by heightened attention on how the central bank communicates and executes policy. Uncertainty around inflation trends, financial conditions, and global developments continues to keep monetary policy at the center of economic discussion. The past year demonstrated how challenging the environment has become for central banks. In 2025, the Federal Reserve operated amid elevated public interest in its decisions. Rate policy, institutional spending, and leadership planning all drew attention, reinforcing how central banking has become a focal point during periods of economic transition. One significant factor shaping expectations for 2026 is leadership change. The current chair's term is scheduled to conclude in May, prompting a formal process to identify the next leader of the institution. This transition is expected to play a key role in shaping how policy priorities are communicated and how the Federal Reserve positions itself going forward. Leadership changes at central banks often bring increased scrutiny, as markets seek clarity on continuity, philosophy, and long-term direction. Even when policy frameworks remain unchanged, communication style and emphasis can influence investor confidence. At the same time, the economic backdrop remains mixed. Consumer spending has shown resilience, and employment conditions remain relatively firm. However, inflation has proven more persistent than initially anticipated, leading policymakers to proceed carefully. This environment makes aggressive policy shifts less likely in the near term. For financial markets, this suggests a year of gradual adjustments rather than dramatic changes. Investors are expected to focus closely on economic data releases, policy statements, and guidance from Federal Reserve officials. Another challenge for the central bank is maintaining credibility and stability amid ongoing uncertainty. Clear messaging and consistency will be essential as policymakers balance their dual mandate of price stability and maximum employment. Any unexpected shift could increase volatility, while steady communication may help anchor expectations. Looking ahead, analysts anticipate that 2026 will test the Federal Reserve's ability to navigate complex conditions while maintaining institutional independence and public trust. Rather than a year defined by rapid policy moves, 26 is shaping up to be a period of careful evaluation, incremental decisions, and continued attention from markets around the world. As the global economy adjusts to evolving conditions, the Federal Reserve's role remains central, not just in shaping U.S. financial conditions, but also in influencing global market sentiment.